The year 2022 brought a surge in volatility to the stock market, resulting in hard-earned lessons for the retail stock investors. Whether it was the impact of COVID-19 Omicron wave surge or the Russia-Ukraine war, instability in crude oil prices, worldwide inflation, interest rate hike by the Fed, Europe's energy crisis, massive FII selling, healthy domestic inflows, or the possibility of a recession. The stock market has a whirlwind of a year. Although Nifty 50 and BSE Sensex achieved historic highs in December 2022, the stock market may face short-term volatility due to the global challenges potentially impacting the stock market's performance in 2023. Amid the worries of global recession and a wave of FPI selling that could impact market sentiment, the government has set a goal in Budget 2023 to reduce the fiscal deficit to 4.5% of GDP by financial year 2026. As a result, investors have found long-term investments more advantageous than short-term and intraday investments. So, to successfully invest in the stock market in 2022, it is essential to understand and manage volatility. Here are 3 tips to help you do so. Number 1, monitor your investments. Assess your investment portfolio to ensure that you are not overly reliant on a single type of investment or option. By frequently revisiting your portfolio, you can offset losses in one area with gains in another, optimizing long-term returns while minimizing investment risk. Number 2, consider bonds. Fixed return bonds can provide a return on investment even when there is ongoing market volatility, thereby reducing market risks. For investors looking for a stability in their portfolio while still benefiting from potential gains from the stock market, bonds are a desirable option. Number 3, diversify your portfolio. Well, it's time to revamp your portfolio as relying on the same stocks may result in losses during unexpected market downturns. To safeguard and increase your investments, it is beneficial to diversify your portfolio with alternative investment options like commercial real estate, leasing, bonds, or commodities. The market's turbulence teaches us how quickly things may go wrong. So, always have a backup strategy in place and be ready to adapt your course of action to the market sentiments. We hope you learned something new today. Don't forget to subscribe to our channel for more informative videos like this.